Welcome to The Landlady Listens. The podcast where we talk all things real estate, development, and the mindset it takes to build your dream life. Okay, hey guys. It's Landlady. I'm your host, Meg Hayden, real estate broker, new construction expert, and a believer in making big visions into a reality. So if you're ready to build it, dream it, and live it, let's dive in. Hey guys, it is Meg Hayden, the landlady. I'm super excited for today's episode. We have Carissa and we have Alex, and we are here to talk about commercial lending and specifically to talk about SBA loans. So welcome guys. Thank you so much for coming. Tell me a little bit about yourselves, like as human beings and individuals.
So I started at Home Loan as an intern in 2016. Shoreham Bank was formerly known as Home Loan Investment Bank. So I came on as an intern going into my senior year at the University of Rhode Island.
Okay, so you're a Rhode Islander.
Correct. Yeah, born and raised, been here, never left. Went to school here. Grew up in East Greenwich. Went to URI. Was there for 4 years. And then I've stayed here after. I've been at Shoreham Bank since I graduated URI in 2017.
What'd you study?
So I studied finance. I started as accounting. Wasn't too sure what I wanted to do. I knew I wanted to do something with numbers and math. Started with accounting, had a couple internships with an accounting background, accounts payable, stuff like that. Really wasn't for me. So going into my junior year, I switched over to more finance specific classes, switched my major to finance. Started to learn more about investments, banking, stuff like that. Came on as an intern in the commercial department in 2016 going into my senior year. And then when I graduated in 2017, I came on full time. Have been there for almost 8 years now, full time since. So started out just as doing bankruptcies, collections, workout loans, stuff like that, seeing the bad credits and how to work those out.
So what got you into commercial? Like, what did you like about that aspect of it?
So I like seeing the different financials, different business types, just seeing the numbers behind how business operates, revenues, expenses, stuff like that, seeing how these businesses and these owners are able to make these companies work.
Cool. And I'm excited because that's really what I want to talk about so that sellers can really understand what they need and what numbers to show, to be able to get it to the closing table. So I'm super excited to have you on. Thank you so much. And then introduce you, lady.
Yeah, so very similar to Alex. Rhode Islander, born and raised. I'm from Warwick, though, not Egypt.
Warwick.
Also went to URI, got my undergrad there for accounting. Loved it. Did my time in taxes for a little bit. Liked it. A little boring. I wanted to do more with the numbers. I liked looking at the corporate tax returns and all that. So instead of preparing them, ended up with an internship at Home Loan in the commercial lending. So enjoyed that for a while back in 2019. Once I graduated, moved over to there full time. Been there ever since in commercial, worked my way up. Also recently got my master's out of Boston University. So
congratulations. What's your master's in?
MBA.
Nice.
Yeah.
Congrats.
So business administration, so keeping up with all the business stuff. So I have that as well. Just been really enjoying the time on the commercial side of things.
Cool. So tell me a little bit about what you guys even see in commercial lending now that's kind of like coming up.
Yeah. I feel like it's probably been our strongest year yet in commercial. Obviously, we've been very strong in the commercial real estate side of things, but we've been seeing a lot of business acquisitions come through and people looking for working capital to boost their business. So
let's break that down. The three things that you said, just even business acquisition, like for people who are just getting into the business space, commercial space, I think that's a good way to just even talk about, parts of commercial lending.
Yeah. Do you
Yeah, so business acquisitions, if we're looking at a business acquisition without real estate, if it's a change of ownership, we'll want to see the seller's tax returns, the seller's historical financials. From the buyer's standpoint, we'll want to vet them. We'll want to make sure they've got a business plan, projections. It always helps if they have experience in that field.
So in terms of a business plan, like how long, what are you looking for in a business plan? Like how long out?
Every deal is different, so we want at least 2 years of financial projections, and then basically an executive summary on management, plan for operations, everything like that. So we'll get 2 years of projected financials, and then on top of that, get a written business plan with basically, if it's a change of ownership or if somebody's getting into a new venture, get their thoughts on what they're going to do, full scope of plans basically for the operation they're going to undertake.
Do you guys have like templates for that you give out to people or not typically?
Not typically.
I feel like it wouldn't be a bad thing.
Yeah, no, I mean, we could easily give a breakdown of different pieces we want them to hit, whether it be executive summary, management, stuff like that. Most of these business owners have some sort of plan or something ahead of time to provide to us if they're really interested in getting into some sort of
And they
venture.
could just chat GPT it.
Exactly.
Like, hey, hey,
Exactly.
can you write a business plan for my SBA loan? Well, it's funny because I've been reading Main Street Millionaire by Cody Sanchez, and she talks a lot about business acquisition. And so for me, I'm specifically, real estate minded, but having started listening to her book to just think about business acquisition is if you buy the right business, like, so no restaurants, it's not failing. It's been increasing, just like all the normal, boxes to check. But it's been interesting to start thinking about, about being able to at least make she says $220,000 of cash flow. So that you're making $100,000, you're hiring an operator for $120,000, and so just thinking about buying businesses where it is cash flowing and there's no owner, or the owner that's there, their kids don't want to take it over, or they really don't even think that it's something that is worth selling. So she teaches you really how to find sellers for specifically like what you're looking for, and she talks about, you can't I can't tell you what business to buy because I don't know you, right? And so it's about finding a business that really pertains to like what you're doing, your expertise, and then also purchasing businesses around like that support the other businesses, right? So when you think real estate, it's cool because it's like when you think real estate, you're like, okay, like maybe I'll buy like a cleaning business, that is making X amount, and I can add those automated like text messages or whatever add-ons you as a business owner can do. So anyway, it's just been like really cool. So I was glad to hear you guys talk a little bit about business acquisitions. So what are you guys looking for in terms of for a business acquisition? Like what are the numbers and the return that you're typically looking for?
So it's kind of twofold. I mean, we look at deals every day, some like in a change of ownership, business acquisition point of view. We see businesses that don't show historical cash flow, that a new owner in there has got a good plan on how they're going to improve operations, how they're going to increase revenues, how they're going to cut on expenses. So there's kind of the businesses that can't make it work, that don't show the ability to cash flow historically, and then we'll focus on our buyer and how they plan to improve, increase productivity, stuff like that. We also see a bunch of deals where the historical financials are strong, and a new owner can really go in there, keep the same management, go in there and just do a smooth transition, keep doing what the prior owner was doing. There may be a short period of time where the seller will stay on, show them the ropes of the specific business, how everything operates. But we see both. We see some, hey, the seller really wasn't running this business to the best of their ability. Here's what my plans are. Here's how I'm going to cut expenses, increase revenues. Then Then we see some businesses that showed the ability to service the debt, great historical financials, good cash flow historically. And then we'll just want to make sure we vet our buyer, make sure they know what they're doing and they're able to keep it running smoothly and everything like that.
Yeah, I feel like it's a huge risk though. I mean, in general, for newer people. So talk to me a little bit about like the SBA loans. What is an SBA loan?
Yeah. So SBA loan is a government guaranteed loan by Small Business Administration. I think it's really great for individuals, small businesses. It gives them a better equity position than maybe most conventional loans would. Obviously, if you're getting a conventional loan, they're looking for a higher equity injection.
How much typically is that?
I would say at least 20% or more.
So that's a down. So that's a down payment, people. That's what you're doing for your down payment. So an SBA is around 10%.
Yeah.
And then if you were to do conventional, it's about 20%.
Minimum.
Minimum. Yeah.
Yeah. Yeah. So SBA, they require a minimum of 10%. We do like to see a little bit more in some cases just to make sure we're in a good LTV position.
What's an LTV position?
Loan to value. So it'll be your appraised value, divide that by your loan amount. You'll get your LTV.
And your LTV, what do you guys want to see that at?
Typically 80 to 85%, which some cases I've seen other lenders be much lower. So that's a good range to be in for a commercial real estate loan. The SBA requires a 100% discounted loan to value. So they take discount factors on.
What is a discount? What are these discount factors that you talk of?
They look at the liquidation value of the commercial real estate, FF&E, home if that's
FF&E,
furniture, fixtures, and equipment.
Okay.
Personal property. Yeah, so they take 85% of the commercial real estate of a home. They take 10% of FF&E. So they look at a discounted factor of 100%. So after you discount those.
And say those again.
The percentages.
Yeah.
85% of commercial real estate and 10% of FF&E.
And then they'll, when you liquefy, what were the things that they were looking at?
Yeah, so they'll take, once you do those discount factors, that'll create, let's say, the liquidation value. That has to either be greater than or equal to your loan amount in order to meet the SBA's requirement.
And go over the discount factors again.
85% on commercial real estate.
Got
and
it.
10% on furniture, fixtures, and equipment.
Got it. So my question too is like when you're buying a commercial entity, can you talk to me a little bit about how they factor in the real estate plus the business?
Yeah, so I can speak on that. You're going to get a max term of 25 years if your commercial real estate loan proceed wise is allocated more than 50% of your proceeds. So you really want that to be the bulk of your loan.
Okay, so give us an example.
So I've had, let's say,
easy numbers.
Yeah, someone's buying a liquor store and the real estate's valued at $1 million purchase price and the furniture's fixtures and equipment is, let's say, $900,000, or not FF&E, business value. Those are very close. So you want most of your equity going towards the business, so that way you have more real estate allocated in your loan amount. You're going to end up with a much better loan term.
Cool. So tell me, what do we need for an SBA loan to get that going, for the real estate as well as for the business acquisitions? And you can do SBA for both, right?
Correct.
Okay.
I can hit on that. I also just want to mention on loan to value wise, Carissa was mentioning we're typically 80-85% loan to value, and then the SBA requires 100% discounted. Another positive with the SBA, if the commercial real estate doesn't meet that loan to value requirement, if any of the guarantors or any of the owners in the business have personal real estate with equity that they're able to pledge, we could take a secondary lien on some of those properties. Just to cover that shortfall, basically. So if we're above 100% discounted on the SBA side, but one of the owners has a few $100,000 in their primary residence or something like that, we could basically get an appraisal on that primary residence, figure out what they owe, and just take a lien on that shortfall that we have on that commercial real estate.
That's interesting. So you can just ask, I mean, as a seller's agent, I could just ask them if it's not cash flowing as it is now, you just take out a secondary lien on your property if you don't have the cash.
Correct. So that's a positive there as well. When we're looking at, are you asking documentation wise what we want to see?
Yes. Because that's like the most annoying part. But I know that's like your job, but it's also the most annoying part as a listing agent is getting everything together.
Yeah. So I'll just go back to Carissa's example on a liquor store. If there's going to be somebody selling a liquor store with real estate and their business involved, we would basically request the last 3 years filed tax returns for that business. If there's an operating company, and a lot of these businesses, gas stations, hotels, stuff like that, liquor stores, they'll have a company that owns the real estate, and then another company that's the real estate holding company, and then a separate business that's an operating company that'll run the expenses of the business through. So we'll want to see all last 3 years filed tax returns for all aspects of the business, real estate, and then operationally. We'll want to get within 120 days an interim financial statement. So right now we're getting into May. We would want to see something for 2025, whether that be January, month end, February, first quarter, just get an idea of where they're at year to date. And then that's really it up front from the seller side, last few years financials, most up-to-date financials. We'll take that, figure out what they're listing the property for, see where we'd be at a loan amount for a potential buyer, and just run the numbers. When we're first looking at a deal, we're really going to be focusing on the cash flow. We like to see above 1.25 times historical debt service. So that's the number we're going to be looking for there.
So how do you come up with that number?
So we're basically taking our annual debt, figure out what 12 months of debt payments would be.
And what does that all include, the debt payments?
It's just going to be principal and interest. So we'll figure out if it's going to be $1 million loan, we'll basically just plug in $1 million loan. If it's eligible for a 25-year term, put it in for 25 years. All our interest rates are variable based on prime. So prime right now is at 7.5. As prime goes up or prime goes down, these interest rates on the real estate loans adjust accordingly as well on a quarterly basis. So we would basically figure out.
So what are the loans at now? I know they're like, there's obviously ranges and it depends on the buyer and everything like that.
Yeah. So our loan, the range of interest rates where we're at on these variable rate real estate loans are prime plus 1 typically is our low end. Up to prime plus 3 is the most that we can charge.
What is a prime?
Prime's at 7.5 currently.
Okay, but like, what is a prime?
Prime's just Wall Street Journal Prime Index. It fluctuates with the economy. Is basically what.
Has it been going up or down?
It's gone down a couple times in the past year or so. It was low in the mid 3s for years. During COVID, it was very low. And then post-COVID, it kind of went up, rose, and now it's started to come down again. But do you have anything to add there?
No, I missed when it was at 3.25.
Yeah, it made these deals much easier, obviously.
Totally. So I have a question. So let's say there's, I have a client who is looking to sell his business. He's looking to sell the real estate, the condo, and plus the business. But let's say he landed a really big contract, right, that doesn't go into effect until whatever, let's say the next 3 months or even 2 months. He's not going to be able to show the projection of what he's going to make in the future. Like, how do you account for that? Or can you even account for that?
We could look at projections. I mean, especially if they have a contract, if it's something they're able to provide, that just helps make that case even stronger. But if they're able to show that in their projections, we can kind of calculate that out and see how that would affect their revenue, their net.
Okay. Cool. So they could have like a higher evaluation essentially. Like we could get a
Knowing
better
it's
number knowing it's going to come.
Yeah.
Like for our comfortability, are you talking about like appraisal wise, like if we're going to get a business valuation?
Yeah.
Are you asking how that would affect it?
Yeah, how it would affect it, and then if we can also touch base on like how on the appraisals.
Yeah. So like a business valuation, for example, if somebody's selling their business and they just landed a future contract that the buyer would be able to basically inherit.
Yeah.
That's something we could send if we're getting a business valuation. Send that to the business valuator, let them know, give them an overview. But they should be able to factor that into the value of the business, even if it hasn't shown historically.
How much does like a business evaluator cost?
Couple thousand typically.
At most, I feel like even for business valuations, maybe around 2 is typical, but commercial real estate appraisals are more up there.
Yeah, and it depends on the industry. I mean, some industries you can get an appraisal for a couple grand. Some are
And
gonna
is
be-
that for the appraisal for the real estate or just the valuation?
for the real estate? The business valuations are typically lower, less cost there.
So if you were a commercial buyer, typically what are you looking at in terms of those closing costs? I'm assuming the buyer is paying the appraisal fee and the business evaluation.
Yeah, for total closing costs, we'll typically average somewhere between 20 and 30 grand. Again, that's an estimate up front.
Of course.
I have no idea what it's going to be the day of closing, but
Yeah.
we'll adjust once we get there. That's an average. I mean, that's going to cover all of your lien searches, title searches, your appraisal, environmental, credit reports, and you have all your title fees. Your attorney fees are going to go right into that bucket. Those are typically your highest cost items.
Yeah, and I feel like it's just a whole different beast, even with the contracts. Because, I mean, in real estate, it's especially in Rhode Island, we fill out a form pretty much. And it's like we fill out our own contracts, whereas the residential wise and commercial, it's all attorneys. But in most other states, it's actually more attorney led than in Rhode Island typically. So that's definitely like a bigger difference. So talk to me about businesses that you guys are seeing like the most of typically in your bank.
Okay, and I feel like we see a lot of hotels. That's our primary thing we've come across, but more recently we're getting more medical offices, gas stations, local restaurants. We've seen a gelato shop come through, liquor stores. We've had a barber, I think, painting shops. We're getting a lot of good local foot traffic, I think, right now, and a lot of new industries that we haven't seen before.
Yeah, and we not only lend in Rhode Island and New England, but we lend nationwide. When Carissa and I both started, we completely honestly didn't do much in Rhode Island or New England. We market nationwide. We go to nationwide broker conferences. So those are we've got some strong connections from those conferences and stuff like that, where the hotels come from, the gas stations, the liquor stores, stuff like that. We're really making a push to do more locally in Rhode Island, New England, more local businesses, as Carissa mentioned, local restaurants, barbershops, small business owners that were able to finance the deal and then get out there, touch base with them, connect, see them face to face, make sure everything's going well, see if they need any additional assistance. That's really what we're working and growing towards, being more rooted here in Rhode Island. We're going to continue to lend nationwide and grow there, but we're really trying to expand in the Rhode Island and get our name out there locally.
Are you guys
as well.
like a Rhode Island based bank?
Yes. So I think we have our headquarters is in Warwick, and then
So bank locally,
Yep,
you know?
exactly. We've got 6 or 7 branches throughout Rhode Island and Mass, where you can go in, do deposits, open a checking account, open a savings account, stuff like that. At our headquarters, we have our commercial lending division. We've got a residential lending division, home improvement department. We do auto loans and marine loans as well. So the bank as a whole, it's got a bunch of different business lines and divisions.
Yeah.
And we all do our own thing, and but it's been good.
Yeah, I just wanted to have you guys on because I think that, you know, a lot of our listeners are business owners who own real estate or are looking to buy real estate. And so I think it's really important for people to, number one, discuss costs, what things are going to cost and what you're going to need. And so that when you walk in to go buy a business, that you kind of start looking at what the bank is looking at that they feel comfortable with, right? So I think it's super important to have that. So did you guys want to add anything else?
Not really. Just one benefit for the small business owners. Carissa was mentioning the closing costs. Typically, I mean, you never know on a given deal, but typically in the range of 20 to 30,000. A lot of the time, we factor those closing costs into our loan proceeds. If the borrower would like to pay those out of pocket at closing, they're more than welcome. A lot of these borrowers looking to put as little injection as possible. As little cash as they can to get the deal done. So a lot of the time we're financing these closing costs in the loan proceeds just to be paid over the course of the 25-year term of the loan.
Cool. On those hotels, like what are they typically making on, like what's their return for hotels?
Like net or revenue or
Both. I don't know, whatever you have in your head.
I feel like it depends on the hotel size. Like I've seen smaller motels make about like 500 grand a year. And then we've seen larger ones make almost 3 million a year. So it really just depends on the size.
And that's not net. That's
revenue.
The revenue.
Yeah. Net, I'd say probably in the range of 200,000 to 500,000, depending on the size, depending on the revenue, and especially on the larger $5 million loans, being able to debt service those, you need to have strong cash flow there.
Sure.
Yeah, and we do a lot of flagged hotels, do some full service hotels where they'll
What's a flagged hotel and a full service hotel?
Flagged hotel is going to be like your franchise hotels, your Marriotts, your Comfort Suites, La Quinta, stuff like that, where there's a franchise behind where they're paying franchise fees and they've got that name.
What are those franchise fees?
What are they? They're a percentage of revenue, typically a few percent of the revenue, depending on the flag or the franchise.
Yeah.
But I mean, we've got full service hotels where they've got restaurants, full food, stuff like that, full cleaning staff, a lot of employees to account for that.
Cody was telling us to not buy hotels. And also restaurants, because there's also restaurants in the hotels.
Yeah. But we kind of see both parts. We have the small hotels, as Carissa mentioned, say a $500,000 hotel where it's, say, a woman and her husband are in there and they're operating that thing and they're the only two employees with maybe a housekeeper, and they're able to really have their hands on all these expenses. If they need to cut expenses somewhere, they'll cut expenses.
Yeah, that's not the business I'm trying to buy. And no owner
not for
operator.
everybody.
Yeah. But so my last question on the landlady is, what books are you guys currently reading or would recommend?
So I'm not reading any books personally, really. The SBA has their SOP, Standard Operating Procedure, very in-depth document, and just last week or earlier.
That was the heavy reading you decided to go into?
Exactly. I mean, we've got to stay up to date on all these rules and regulations. With the new administration, a lot has changed from Biden to Trump, to be completely honest, and they're becoming a lot stricter on a lot of these requirements. So it's our duty to make sure we understand that and know the rules and regs.
So, like, what's changing?
A lot.
Yeah, there's a lot.
Give me top 2, top 3.
So like a few years ago, they kind of became a little bit more lenient on equity injection requirements, what these buyers have to provide documentation-wise on the funds that they're bringing to the table. This new SOP is really clamped down. They've become stricter, reverted back to a few years ago where we've really got to be heavy on documentation, make sure we're crossing our T's and dotting our I's.
I mean, I don't think it's a bad thing.
No, I
don't think it's a bad thing, because we're headed on the downturn. So if there's like a little bit more restriction on who we're lending money out to, then it's like, then people who don't necessarily like meet the requirements,
They get sifted out.
Yeah, I mean, again, I'm like, I don't love Trump, but but I don't think that that's a terrible policy in general.
No, definitely. And I mean, not only does it benefit the program for everything to get tighter and for everything to operate smoother.
Like it's just like it's like a little bit of like a safety net into like the chaos I feel like we're gonna go into in the next 5-6 years.
And then from the bank standpoint, I mean, the executives, if they know we're going to be tighter and stricter on certain documentation and stuff like that, and looking at everything with a sharper eye, that's going to be better as a whole for the bank as well. So definitely positives to take from it.
Yeah. You're like, but that's your Saturday reading.
Yeah, exactly.
How about you?
Say pretty similar. I like to dig into the SOP, but I've also been really loving Emily Henry books recently. So
Who's that?
she writes a lot of, I'd say maybe like romance type books.
Ooh.
But I've been reading a lot of her books, so she has a new one that just came out or is coming out. So I'll be reading that soon enough.
Cool. Well, I wanted to thank you guys so much for coming on the show today. I really, really appreciate your time. And I can't wait to hear more about you guys. How can people get in touch with you?
I'd say you guys should visit our website, shoreham.bank. We've got a page specific to our commercial division. We'll have our contact information, stuff like that. Connect with us on LinkedIn. We're working to grow and improve our LinkedIn pages. I'm Alex Cleary.
And I'm Carissa Sousa.
All right. Thank you so much. And we will see you next time on The Landlady. Love you. Bye. That's it for today's episode of The Landlady, where we turn your vision into a reality. Remember, success starts in your mind before it ever shows up in your life. Keep believing, keep building, and more importantly, keep taking action. And until next time, trust the process, bet on yourself, and go create the life that you deserve. Don't forget to like, subscribe, and share this episode with someone who needs to hear it. Love you.